mining cryptocurrencies. If you're not involved in crypto or crypto mining in particular, this might sound like a bit of a confusing concept. But for those who are involved, you need to have an understanding of what is mining cryptocurrencies when it comes to tax point of view. Are you running a business? Are you running a hobby? Let me explain that to you today. Hello everyone, my name is Ethan Rushock, and today I'm going to be talking about the tax side of mining cryptocurrencies. So it doesn't matter whether it's Bitcoin or some smaller coin, this will cover it all. Mining crypto isn't for everyone, and in particular in the last few years it's become more and more costly. The electricity costs are so high, you've got to have a right computer set up, and therefore a lot of it is done in big mining pools overseas where we've got cheaper electricity costs. But there are still some people doing it from their bedroom at home. So having an understanding of the difference between hobbies and businesses and how just the tax in general will work on mining cryptocurrencies is really important. And you'll see I keep mentioning a key thing of hobby and business. So I'm going to jump into that section first. So pretty much we need to identify if our mining activities are a hobby or a business. Now I have got a full video on my channel, so go and check that out because that's talking about hobbies versus businesses, but I'll cover some of the key facts here. So the ATO are going to look at things such as, have you registered a business name and an ABN? Or what's the size of your business? Is that comparable with other people, in determining hobby versus business? The other key thing is, what are you doing? Are you running it like a business? Are you keeping records? Do you have a business plan in place? Do you have separate business bank accounts? All these kind of things help to determine that hobby versus business concept. Some of the other things are going to be whether you intend to make a profit. So obviously hobbies are more likely to be it might even be a break-even point. So you might just have one mining rig set up and you're just hoping to, generate a little bit of pretty much converting your cost of electricity into a little bit of Bitcoin, for instance. And then the other thing they look at is, are you repeating the same type of activity, which obviously with Bitcoin or crypto mining, you're going to be doing the same thing repetitively. Now, the key thing is determining this isn't based on one of these factors. It's a combination of them all. So just because you're doing the same activity doesn't make you a business, or just because you intend to make a profit doesn't necessarily always going to make you a business. It's going to be a combination of all these things. And I wouldn't say any one is particularly more key, but if I did have to identify one, it would be the concept of how are you running this? Are you treating it like a business? And the reason why this is so important is because there is going to be a different tax treatment for hobbies and for businesses. So I'll jump into that next and go through the tax treatment for businesses and then the tax treatment for hobbies. Now, before I do get into that, if you are finding any value out of this video, make sure you hit that like button. And if you haven't hit subscribe yet, please do that. It really helps me get my message out to more people, allows me to provide more value to more people. I really appreciate that. Anyway, let's get into the next part of the video. So if you've determined that you are running a business, so you've gone, I meet the definitions of business by the ATO, I'm running a business, okay, how does the tax work? I'm mining cryptocurrency as a business. So on a real basic level, pretty much the income that you receive from mining, so the rewards you're receiving, so it's normally going to be received in that cryptocurrency. So we'll use Bitcoin as the example throughout because that's probably the one that is most common that people know about. So you're receiving Bitcoin as you're mining it, and that's going to be income. But how that's broken up is a little bit more complex than just saying, that's the income. So technically, as you mine the Bitcoin, you're receiving the Bitcoin, this is going to be treated like trading stock. So once you get rid of it to a third party or convert it back to Australian dollars, for instance, that's going to be classed as the sale. And then we're going to have whatever's left still in Bitcoin. That's going to be our trading stock or our stock on hand. Now, these things combined is going to be what makes up our gross profit. So I'll use an example here. Say we've mined $100,000 worth of Bitcoin through the year. So $70,000 of that we've now converted back to Australian dollars. So we're going to have our top line of, sales that have been converted is going to be $70,000. And we've still kept $30,000 of that as stock on hand. So our closing stock is going to be $30,000. And these two added together is going to be what makes our gross profit. So we're going to have $100,000. Now this is a real basic example because obviously then once we get into year 2, we're going to have an opening stock figure and then we're going to have a closing stock figure. And obviously they're likely going to be different. And therefore the movement in that is going to be added onto the income or taken off of the income to get to that gross profit figure. Now we definitely can claim expenses against this. So if we've got electricity costs or we've got computer software or computer hardware or anything that was involved in running that business, that can be claimed. So they're going to make up our expenses portion. And then obviously we're going to have our gross profit, less our expenses, and we're going to come to our net profit. And this is going to be our taxable income if we're a sole trader, for instance. So you can see it's a little bit complex to get your head around to start with, but then it does become simple because it's just a matter of keeping track of your trading stock at all times and what you're disposing of and maybe what you're putting in. And then that's going to allow you to calculate that gross profit. And the expenses side is going to be really simple. That's going to be no different to any other business. So let's take, for example, if we've got a trading stock figure of $30,000 that at the time, when we've mined it, it might have been worth that. But that moves, that goes up in value to $40,000. That will still be our closing trading stock, but obviously those gains are going to be incorporated into that top line, and therefore we will pay tax on those gains even if we haven't disposed of that asset. So that's a key difference when we're talking about a business and that's got trading stock, is that it's going to be based on movements at 30th of June. So we're going to be taking a snapshot at that date and we're going to pay tax based on the values at that date. Now they could drop the next week, but we've already recognized them at that higher value. So then when they do drop and maybe the next year it's at a lower value, that's going to be factored in, and those losses that we've made on those assets, they're going to come off of the other income we've earned. So your record keeping is going to be really key under the business thing. So we're going to probably be using a combination of potentially business tax software. So you might be using something like Xero to keep track of your expenses and keep track of your balance sheet and your profit and loss reports. And then we could potentially be using some type of crypto tax software to keep track of those values of those stock. And we may use a combination of those two to keep track of our total income. And the key thing is, here in Australia, all of this needs to be converted back to AUD. So that's going to be really important that everything's reported in Australian dollars, because that's how it's going to be reported on your tax return. So you really need to make sure you're getting some kind of system where those conversions are done in a correct way. Now, if you do happen to make a loss from your mining business, you potentially could offset this against other income. For instance, if you're a sole trader, but you're going to have to meet the non-commercial loss provisions. So go to the ATO website, have a look into those, because that's something to be aware of. So now we're going to look at it from a hobby point of view. So we've run those business versus hobby tests and we've gone, you know what, this is a hobby. I've just got something set up in my bedroom. I don't really make any money off it. I don't intend to really profit off it. It's just something fun. I wanted to see how it worked. I wanted to, convert some of it into Bitcoin, and I just wanted to kind of test it out. I'm not running it like a business. Therefore, I've deemed it as a hobby. So the first key thing to see is the ATO has ruled this isn't a personal use asset. So don't think you're going to get this tax-free, even though you might hear people go, oh, there's that $10,000 rule, which I've done a video on that. So check that out. But the ATO have said mining Bitcoin isn't a personal use asset. So therefore, you will pay tax on it in a certain way. Now, the great thing is it's really basic. Is pretty much you're going to pay it through the CGT system, so capital gains. And what's going to happen is you've say mined half a Bitcoin, and that's going to have a cost base of $0 because you obviously haven't actually paid for it. It's going to have a cost base of $0, and then when you dispose of it, that's going to be your gain. So you might dispose of that later on for, $20,000, and that's going to be your gain, and that will be your capital gain. So you can see it's a lot more basic than when we're running a business. I would still recommend using some kind of crypto software. So again, done a video, Coinly, coin tracking, check that out, because that's going to make it really simple to go, okay, this is mining income that's come in, and make sure you've categorized everything properly, and therefore it'll be easy to work out the gains and that. But when you think about it, it's probably going to be pretty simple, because whatever your disposal value is going to be your gain if we've got a $0 cost base. So I'll summarize everything there quickly. Hobby versus business is going to be the real key. So once you work that out, you can determine which tax treatment method is going to apply to you. Record keeping is so important. You need to make sure you're keeping those records, and it needs to be in Australian dollars. And therefore, some kind of software is probably going to help you. It might be a combination of business software if you're running it as a business, plus crypto software, to combine them to actually get accurate records. I hope that's been helpful. If you're even considering mining, have an understanding before you start. And if you want to know more about crypto tax treatments, make sure you check out my video coming up on crypto tax staking and how that works. I thank you for being here, and I'll see you on the next video.